What's up, crypto crew, and welcome back to Bitcoin Bulletin, your ultimate source for the pulse-pounding news that moves the markets. The pace isn't just fast, it's breakneck, and if you're not plugged in, you're missing the rocket ship. We've got a packed show today, with developments that are rewriting the playbook and setting the stage for what's next. Get ready, because the crypto cosmos is buzzing, and you're about to get the inside scoop on the seismic shifts that matter. Let's dive straight into the action. First up, we're dissecting a monumental convergence of forces that could be reshaping the entire landscape. We're talking about a perfect storm where cutting-edge technology meets critical global economic trends, and the implications are massive. This isn't just a ripple, it's a wave that could redefine value and opportunity as we know it. Stick around, you won't want to miss this deep dive. Then, hold on to your hats, because a major legal battle has just been decisively concluded, potentially setting a powerful precedent for the entire industry. We're breaking down the details of a high-profile lawsuit that has reached its final verdict, and it's a game-changer for how businesses in this space operate. What does this mean for the giants and the innovators? We've got the breakdown. Next, get ready for a story that's making waves on Wall Street and beyond, as a significant player makes a bold move onto the public stage in a way that's turning heads. We're exploring a debut that's been years in the making, backed by some serious vision, and it's poised to capture the attention of investors worldwide. Is this the start of something huge? You'll find out. And finally, in a move that sent shockwaves through the community, a colossal figure in the Bitcoin world has just made an eye-watering investment in a rival digital asset, signaling a potential paradigm shift in institutional strategy. We're talking about a billion-dollar bet that could rewrite the future trajectory of major cryptocurrencies. What does this massive reallocation mean for the market? We've got all the angles covered. It's a massive day of news, so buckle up and get ready to stay informed. Don't forget to smash that like button, subscribe for all the latest updates, and ring that notification bell so you never miss a beat. Let's go. A macroeconomic and technological power play unveiled. Get ready for a seismic shift as powerful macroeconomic forces and groundbreaking technological advancements converge, creating an unprecedented landscape for digital assets. This isn't just about market fluctuations. It's about fundamental changes that could redefine value and investment strategies for years to come. We're witnessing a unique moment where global economic trends, from inflation pressures to evolving monetary policies, are creating a fertile ground for innovative solutions. Simultaneously, technological breakthroughs are pushing the boundaries of what's possible, offering new efficiencies, security, and utility. The intersection of these megatrends is creating opportunities that are too significant to ignore, impacting everything from how we conduct transactions to how we store value. Understanding this confluence is key to navigating the future of finance and technology. This intricate dance between global economics and technological innovation is setting the stage for a new era, where agility and foresight will be rewarded. The careful accumulation of assets during periods of uncertainty, coupled with strategic technological integration, paints a picture of calculated growth and long-term vision. It suggests a market that is maturing, adapting, and preparing for broader adoption, driven by both systemic economic pressures and the relentless march of innovation. The implications are far-reaching, touching upon individual investment portfolios, corporate treasury management, and the very infrastructure of the global financial system. It's a complex narrative, but one that promises to be incredibly rewarding for those who grasp its nuances. The current environment demands a deep understanding of both the underlying economic currents and the transformative potential of new technologies. This dual focus is essential for identifying the most promising avenues for growth and stability in an increasingly dynamic world. The strategic positioning being observed indicates a sophisticated approach to wealth preservation and creation in the face of evolving global conditions. It's a story about adapting to change, leveraging innovation, and capitalizing on the opportunities presented by these powerful, intersecting trends. So, are you ready to see how this intricate interplay is playing out in real time? Stay tuned as we break down the latest legal victory that could reshape the industry as we know it. Lawsuit dismissed, a win for crypto treasury companies. In a significant development that could echo throughout the cryptocurrency sector, a major lawsuit against Strategy, a prominent crypto treasury company, has been voluntarily dismissed by its lead plaintiffs and an investor. This move effectively ends the legal challenge, potentially offering a much-needed reprieve and a signal of confidence for similar firms managing substantial digital asset reserves. The case, initially filed in May 2025, alleged misleading statements regarding the profitability and risks associated with the company's digital asset investments, particularly concerning Bitcoin, BTC. The complaints, which saw multiple law firms vying to represent investors, mirrored concerns about transparency and asset management within the burgeoning crypto treasury space. The dismissal, described as with prejudice by Brandon Farrick, general counsel for Duaro Labs, means the plaintiffs cannot refile the suit on the same claims, effectively closing the chapter on this particular legal battle. It's crucial to note that the action was not certified as a class action, meaning the dismissal pertains to the named plaintiffs and specific investors, but not necessarily all potential class members. This distinction is important as it highlights the ongoing complexities in navigating legal frameworks for digital assets. Strategy, known for its significant holdings, including over 632,000 BTC valued at approximately $68.4 billion at the time of reporting, stands as the largest player in the industry. The company began accumulating Bitcoin in August 2020, paving the way for a wave of other crypto treasury firms to emerge across various sectors. These firms have since expanded their portfolios to include other digital assets like Ether, ETH, Solana Sol, BNB, and Tron TRX, reflecting a broader diversification trend within institutional digital asset management. The legal scrutiny faced by Strategy underscores the critical need for transparency and clear communication in this volatile market. As crypto lawyer Tyler Yagman previously noted, treasury companies operating like actively managed ETFs need to be exceptionally transparent with their investors. The market's reaction was relatively muted, with Strategy's share price showing a minor decline, in line with broader market movements. This dismissal, however, could be interpreted as a positive sign for the operational stability and legal resilience of crypto treasury firms, especially as the industry continues to mature and attract institutional capital. It sets a precedent that while legal challenges are inevitable, decisive resolutions can bolster confidence in the sector's established players and their operational models. But what happens when the legal battles fade and the focus shifts to bold market moves? Get ready for a story about a high-profile debut that's capturing Wall Street's attention. American Bitcoin makes Nasdaq debut amidst crypto-friendly era. In a landmark event for the digital asset space, American Bitcoin, a prominent entity in the cryptocurrency ecosystem, has successfully completed its debut on the Nasdaq Stock Exchange. This strategic listing marks a significant milestone, positioning the company for enhanced visibility and access to capital markets within an environment increasingly receptive to blockchain and digital currency innovations, particularly under an administration perceived as more crypto-friendly. The move onto a major public exchange like Nasdaq is seen as a pivotal step, signaling a growing maturity and acceptance of cryptocurrency-related businesses within traditional finance. It allows American Bitcoin to tap into a broader investor base, attract institutional capital, and enhance its corporate profile on a global stage. The company's decision to go public comes at a time when regulatory landscapes are evolving, and there's a palpable shift towards integrating digital assets into mainstream financial frameworks. This debut is particularly noteworthy given the current political climate, with perceptions of a more supportive stance towards the crypto industry potentially creating tailwinds for such ventures. Analysts suggest that this listing could pave the way for other crypto-focused companies to follow suit, further bridging the gap between the digital asset world and traditional Wall Street. The implications of this IPO extend beyond American Bitcoin itself. It represents a broader trend of legitimization and mainstreaming of the cryptocurrency sector. As more companies embrace public markets, it provides greater transparency, accountability, and investor protection, which are crucial for building long-term trust and encouraging wider adoption. The success of this debut could also influence investment strategies, with traditional investors potentially becoming more comfortable allocating capital to companies with direct exposure to the digital asset economy. The company's business model, likely centered around Bitcoin-related services or investments, will be under close scrutiny, but its presence on Nasdaq signifies a commitment to robust corporate governance and reporting standards. This public listing is more than just a financial transaction. It's a statement about the future of finance and the integral role that digital assets are expected to play. As the market continues to develop, American Bitcoin's journey on Nasdaq will be closely watched as a barometer for the broader acceptance and integration of cryptocurrencies into the global economy. The visibility gained from this listing is expected to drive significant growth opportunities and solidify its position as a key player in the evolving digital asset landscape. But the market isn't just about public debuts. It's also about massive, unexpected shifts in investment strategy. Prepare yourself for the jaw-dropping news of a Bitcoin whale making a colossal move into Ethereum. Bitcoin whale's $1 billion Ethereum purchase signals institutional shift. In a move that has sent seismic waves through the cryptocurrency market, a significant Bitcoin holder, often referred to as a whale, has executed a staggering $1 billion purchase of Ethereum. This colossal transaction is not merely a large trade. It represents a potential paradigm shift in institutional investment strategy, signaling a growing diversification and a reevaluation of asset allocation within the digital currency space. The sheer scale of this acquisition, facilitated through major institutional platforms like Galaxy Digital, FalconX, and BitGo, underscores the increasing sophistication and conviction of large-scale players in the crypto arena. The transactions were reportedly spread across multiple interconnected wallets, a common tactic to manage large volumes and avoid immediate market impact, yet the sheer size could not be hidden, igniting widespread speculation and analysis. Following this massive buy-in, Ethereum's price experienced a notable surge, climbing over 21%, a clear testament to the profound influence that substantial capital flows can exert on market sentiment and price action. This event validates the historical pattern where large, strategic purchases often precede significant price appreciations, leading analysts to ponder whether this marks the dawn of broader institutional interest in Ethereum's potential. The implications of this whale's decision extend beyond a simple price pump. It reflects a growing confidence in Ethereum's ecosystem, its technological roadmap, and its potential for future growth, challenging the long-held narrative of Bitcoin's singular dominance. This diversification by a major Bitcoin-aligned entity suggests a maturing market where investors are increasingly looking beyond a single asset to build robust digital portfolios. For Web3 startups and smaller players in the ecosystem, this trend is particularly significant. It indicates a growing institutional appetite for a wider range of digital assets, potentially unlocking new avenues for funding and partnerships. However, it also highlights the need for these smaller entities to adapt their treasury strategies. As institutional capital flows increasingly target assets like Ethereum, and as market dynamics become more complex, traditional treasury management approaches may prove insufficient. Embracing advanced compliance measures, sophisticated liquidity strategies, and predictive analytics will be crucial for smaller firms to navigate this evolving landscape and remain competitive. The influx of institutional capital into Ethereum, further evidenced by BlackRock's iShares Ethereum Trust ETF seeing $1.7 billion in inflows, reinforces the narrative of growing optimism surrounding Ethereum's future. This $1 billion Ethereum acquisition by a Bitcoin whale is a powerful indicator of shifting tides, demonstrating that even dominant players are seeking to capitalize on emerging opportunities, thereby reshaping the investment strategies and operational frameworks across the entire cryptocurrency industry. And that massive shift in capital has certainly got everyone talking. Let's quickly recap all the major moves we've covered today and what they mean for you. And that's a wrap on another action-packed episode of Bitcoin Bulletin. We saw a major convergence of macro and tech trends creating new opportunities, a key lawsuit dismissal potentially boosting crypto treasury firms, a significant debut on the Nasdaq signaling mainstream acceptance, and a monumental $1 billion Ethereum purchase by a Bitcoin whale pointing to a major institutional strategy shift. What a day of news. If you found this information valuable, do us a favor. Smash that like button, subscribe to the channel for all your essential crypto updates, and ring that notification bell so you're always the first to know. And hey, let us know your thoughts on these stories in the comments below. Don't forget to follow us on all our social channels for even more real-time insights. Until next time, stay informed, stay strategic, and keep building.